Hello, good morning. My name is Steve McMahon. I'm a loan center manager here at Dollar Bank. I thought I would start out today by just briefly describing to everybody what exactly we do in the loan centers at Dollar Bank. What we primarily do, we actually have 12 locations, loan centers in the Pittsburgh area, and we also have 7 locations up in our Cleveland market. What we primarily deal with is consumer loans. That be home equity loans, home equity lines of credit, unsecured loans, and also auto loans. So we really don't focus primarily on purchases of homes, but we do work on refinances, things like that. One of our primary objectives in the loan center is to develop business and bring in new business to Dollar Bank. And we do that by networking, cold calling businesses, and also joining chambers and other networking groups to try to bring them into Dollar Bank so we can offer financing options to their customers. Between the Pittsburgh and Cleveland area, we have over 350 signed up vendors that are signed up for the Dollar Bank's preferred referral program. So what I'm going to go over this morning is what exactly our referral program is. As you see, Dollar Bank's referral program is financing solutions to help anybody with any home improvement need or any healthcare related to help their company grow. For everybody in everybody's company, what is your company's primary objective? It would be to grow and be profitable. How can us at Dollar Bank help your business to grow and be profitable? We can help you secure more sales and maximize each sale with absolutely zero cost to you. So I just want to kind of touch on that last point of zero cost to you. A lot of financing options that are out there will charge the business a certain percentage to go through them for financing. Our niche at Dollar Bank is we won't charge the business to do financing through us. And I'll kind of touch a little bit more on that point, but that is one key point that we go into businesses and discuss with business owners where we can save them money, by not charging them for financing. How can Dollar Bank accomplish this? By providing their customers the financial power to finance their home improvements or healthcare related expenses through Dollar Bank where they might not otherwise be able to do so. So a lot of places or a lot of companies, home improvement companies, healthcare related companies such as dentists, cosmetic surgeons, may not offer financing. And that's where we can come in and offer financing options for their customers. Think about it. As a consumer, would you rather be given options when dealing with a home improvement contractor or healthcare provider? For example, if you need to get work done on your kitchen, bathroom, roof, windows, or doors, or facing healthcare related expenses, your service provider can give you 2 options. The first one would be a fix or repair of the immediate problem, which you may or may not be able to afford now. Maybe you don't have the funds available to be able to pay for the repair. And the other option would be an estimate of how much more work that could be done that will provide an added benefit to the customer or client with low and affordable monthly payments. Which would you prefer? That's what offering financing can do for your business and your customers. Some of the primary benefits. It gives your customers the purchasing power they need in order to complete the home improvement or pay for the healthcare related expense that they may not have the funds for. It helps you provide options to your customers. Now you can quote the cost of the necessary improvement or procedure as well as other enhancements that can be potentially financed. So with this, if we give them financing options, we might be able to do some other enhancements or home improvements to the home, to prevent work to be done down the road, and also the same thing on the healthcare end. And then we can let the customer decide what is going to work best for their budget. It helps them and it immediately impacts the size and cost of the project or procedure, which can help your company. So if you're able to offer financing to them at a lower payment, then you guys could get a higher sale, for the business. The basics of offering financing through Dollar Bank. It is a very quick and simple process to join. Really entails just a contract to be signed. We actually have to go through an approval process, but it only takes about 1 week, maybe a little bit less to do that. Again, touched on it earlier, it's zero cost to your company. So we would not charge you any cost to your company going through our financing options. We offer a brief online application. And as you see us here, the customer does all the work. Touching on that, once we sign you up, as we call an approved vendor for a referral program, your company will get an 8-digit specific code for your business, which you can have your customers, even when you're in the home trying to sell the project to them, go right online and apply for the either credit card or the loan at that time. The other option for this is, and we kind of push a lot of our customers to have them just give us a call and we can do the personalized service and take in the application for them right over the telephone. On our credit cards, they are MasterCards, so we refer to it as a timeline credit card, where we can get an instant approval of any amount of $10,000 or less, which the customer would be notified by that once they do the application online via email. Our products are designed to fit both the customer's borrowing need and their current financial situation. The first product I'll kind of go in a little bit more depth is our Timeline MasterCard. What it is that we offer the customer is a 12-month at 0%. We can approve these up to a limit of $15,000 for the customer. And the way this credit card works is a little bit different than maybe some of the 0% options you see out there. With ours, we will only charge interest to the customer with whatever balance they have remaining after the first year. Okay, so they get it paid off within the first year, they don't get charged any interest. If they don't get it paid off within the first year, we're not going to charge them any back interest, just be charged interest on the remaining balance. Some of our home improvement, home equity loans, we do offer home equity term loans, first and second positions, up to 90% loan to value. And the home improvement loan that we offer at Dollar Bank is one that a lot of you guys may not see out there. It's an over equity product where we can go to 125% of the value of the home, up to $50,000. This comes into play a lot with our home improvement companies, for example. If you just move into your home, don't really have that much equity when you first purchase the home, but say you're looking to get a pool. We can now do a loan for you because it's a home improvement to the home, which is going to increase the value of the home, so we're able to go over equity with that product. And then we also offer home equity lines of credit, again, first and second position, up to 80% or 90% loan to value. And then we also have fast approvals that if the customer consents, we will actually be able to tell you as the business if they're approved or decline. Benefits your company will get working with Dollar Bank. We're a localized bank. We are one of the largest mutual banks in the country. And we've been around since 1855. We have specific products that'll fit your customer's specific need. It's a never one-size-fits-all mentality. And kind of going off that, with every one of our applications, we actually do have an underwriter that'll specifically take a look at all of them, all of our credit card applications, loan applications. So we always have somebody just not going right to a computer, have somebody actually looking at the application and make a judgment decision on it. And again, it's absolutely no cost to you as the business. Again, as I mentioned earlier, some other financing options out there may charge you between 3 and 12% of the amount financed to be able to go through them. And as you see, Dollar Bank will not charge you. So to summarize, if you focus on your company on selling financing, you will simply have larger, and more profitable projects and procedures. It costs you nothing. Dollar Bank will help you every step of the way. The support that we can offer for you includes coming out and training your sales force and how to sell the financial options that we offer through Dollar Bank, getting everyone comfortable with the application process, and we will also provide your company with marketing materials, signage, and promote the benefits of financing through Dollar Bank. The other benefit we can add is we can actually add an online link to your website, so where your customers can just simply click on that link and go in and apply for either a credit card or a home equity loan, whatever they're looking to do. Does anybody have any questions for me? Yes. Mm-hmm. So to answer your question about the link, once we sign you up and get you as an approved vendor, we'll give you a specific 8-digit code, okay, that they could either apply through dollarbank.com, and then we could also give you a link on your website. So all they're going to simply have to do, it'll kind of just say some verbiage, click here for financing through Dollar Bank. They will just simply click there on your site and be able to jump right into the application process at that time. Any other questions? Mm-hmm. Yes. Like how much more their sales specifically increase? That I really don't. That would be like, for example, one of my pool vendors, they won't divulge all that type of information to us typically. But certainly what I can tell you is, if say, for example, we have somebody who applies for the 0% MasterCard for $3,000. A lot of the time, or most of the time, we may approve them at a higher limit, at either 5, 10, or even up to 15,000, depending on their current situation. Then that way, when we go back and tell the vendor, this customer's approved for 3,000, but we got them approved for 10, that gives them an opportunity to upsell more to that customer now, because they got a higher limit that we approved them for at that 0%. Exactly. So there might be some things that they talked about on the original visit. Maybe there's immediate fix. Biggest one I could say is definitely through heating and cooling vendors. Heat goes in the middle of the winter. You're going to want to look to a quick fix there, obviously. But maybe if they get approved at a higher limit on the card, now you can get them a new furnace, and now they're not going to have to call and, keep paying for those small repairs and things like that. Any other questions? Yes, sir.
I just wanted to give a little bit of a testimonial to what you're speaking of. One of my clients is a water damage restoration company.
Mm-hmm.
And they have took out. Guess what? There's a flood in the basement.
Yeah.
How are they going to fix it? They got drywall. They got all the construction costs. They're not expecting it all.
Right.
And through the Dollar Bank program, what used to be, guess what? We're just going to clean it up and walk away and places crack.
Right.
They're now getting that construction money and getting the opportunity to do the drywall, to do the
Right.
services that they would not have had they not had that opportunity. So
Exactly.
that's one of the things that you do that has been a very big boost to their business. And I see it. I talk specifically about it. So that's a great example.
Thanks. Thank you very much. And what it is, it kind of off your point, it's definitely a win-win all around. Okay, as you can see. For the business, they're not getting charged. They have upsell opportunities with the financing. Customers are then going to be able to have an affordable payment. What we also try to do is to see if there's any other debts they have out there on our end at Dollar Bank to see if we could refinance them into a home equity loan to consolidate credit card debt, student loan debt. So it's a great program, especially when everybody wins, you know. Yes. Yeah. Right. Mhm. Right. You're trying to educate them on that. Right. You know, my answer to that would be customer service. You know, that, you know, when you're looking for a new purchase, that falls into a different department. But as far as Dollar Bank goes, customer service and trying to educate the customer is something we take a lot of pride in doing. You know, we do have specific programs. If anybody's heard the Mortgage for Mothers, Mortgage for Fathers that we have out there. But I would say you know, to answer that question, that I would probably say the fact that we will spend time with our clients and working through with them on any questions that they have. I hope that answers it for you, but I could definitely look to get you a better answer. Yes. Yeah. Yeah. Well, when they're going to look at making a decision, you know, and like what I touched on about how we have actually a human looking at every single application. You know, when they're looking to make decisions on approvals, certainly the three main things, especially for a loan, are going to be credit score, your debt to income ratio, and the equity you have. But you're talking if you have a low score. Right. Yeah, student loan debt. It's student loans are something we don't offer yet at Dollar Bank. I mean, we traditionally refer them off to somebody else. Yeah. Will we be able to help you with that? Absolutely. I mean, you know, I don't specifically work where it comes to the purchasing of the home, but we certainly have people that could help you in trying to figure out maybe what you can do to get to that point of being able to move to purchase the home. So, okay. Anybody else? Kind of running short on time. I'm going to turn it over to Dave Weber. He's here with our business banking here at Dollar Bank, and I just wanted to thank everybody today. If you guys have any more questions, I'll be working the Dollar Bank booth today all the way till 5 o'clock. So thank you very much. Yeah, I got you. Which one do you want to go with? This one. Yeah, I got it right in my hand. You guys all right?
Good morning. How was everyone? Bear with me. I woke up with allergies and took a bunch of Benadryl, so if I fall off the stage, let me sleep. How many of you are business owners? How many of you want to become business owners? Okay. So what I'm going to do today is I'm going to try to debunk some myths. I'm going to try to help you understand what banks look at when they lend money. Because a lot of people think that we sit in our offices and we have this dartboard and with a yes and a no. And if the dart goes in the no, you get declined. If it goes in the yes, you get approved. But actually, we look at a few other things than that. So this is what this presentation is about. At the end, I also will take questions, but for the sake of time, I'm going to try to get through the material. So, getting started. When we talk to new business owners, we give them some advice as to what they need to do to get started, okay? First, you have to have a vision. Most people have that. You have to develop your team of advisors, okay? This is a CPA. This is an insurance agent. This is an attorney. This could be a friend who has history in business. A team will help lead you down the right path. If you try to go it alone, most of the time, you won't succeed. At least that's what we've seen. You have to form a business plan. A business plan is your roadmap to success. Okay, oftentimes in our business, we see someone has a great idea, a fantastic business plan. And then what happens? 6 months down the road, a year down the road, 18 months down the road, they start veering off of their plan. And what happens is, when you veer off your plan, sometimes it can be disastrous for a business. You get into lines of business you're not used to, you start selling products or services that you weren't originally intending, and it can have disastrous effects. A business plan is not just when you start your business. A business plan is to use as you continue to grow to make sure you're on the right roadmap to where you want to be at the end. You have to identify your needs. I can't tell you how many times we talk to businesses or business owners and they really don't know what they want or need. Think about that. You have a business, you're running it, but you don't really know what you need, okay? You have to try to identify your needs. Is it a short-term financing need? Is it a long-term financing need? Is it cash flow support? Is it payment relief? You have to identify your needs. Okay, so here's the big one. What's important to banks? We look at the background of the business. That makes sense. We look at the experience of the owners. One of the things that freaks me out is when I have, let's take a tech company or a healthcare company, and they come to us for a loan, and the business owner was in the gas well service business before that. Hold on. You're telling me you're going to run a healthcare company, but you just got out of the gas well business. Help me understand how this works. It's not so much just about what the business does, but we want to understand what the background or the experience of the owner is. Competition. We will look at competition. If you were opening up a Rita's Italian Ice franchise, we're going to look and see if there's a Baskin & Robbins across the street. We look at industry trends. Oftentimes, you can have a fantastic business, but you're in an industry that is either growing or decreasing. This happened with Marcellus Shale. Everybody's heard of Marcellus Shale, right? I hope. Okay, so about 4 or 5 years ago, every bank wanted to be in the Marcellus business, okay? We had gas and well companies coming to Washington County and Butler County, and we had service companies that were trucking in dirt and sand, people moving water, and banks couldn't get rid of the money fast enough. All of a sudden, natural gas prices went down, and all of a sudden, nobody was buying natural gas. And guess what? Many of those companies that service the gas well business went out of business, filed bankruptcy. To no fault of their own. It was the price of gas that caused their issues. So we have to do some industry analysis, and we have to look at industry trends. That loan decision might not be based on your creditworthiness. It might be on the industry analysis that we do. We look at financial projections. Obviously, that makes sense. And we look at what amount is going to be financed. Believe it or not, you will get a bank to look much harder at $1 million or a $2 million or a $10 million loan than they would a $10,000 loan. That makes sense, correct? And we look at the 5 C's of credit. Has anybody heard of the 5 C's of credit? No. Fantastic, I'll tell you. Okay, first and foremost, the most important thing to a bank, absolutely most important, is cash flow. How is my loan going to get repaid? I could have the best collateral in the world. I could have a beautiful house in Mount Lebanon or Fox Chapel or Peters, and it's free and clear, and I'm taking a mortgage on that property, and guess what? If they don't have cash flow and they can't repay the loan, I'm going to have to go after my collateral. And banks are not in the business of taking collateral. Cash flow is most important to what we do. The second most important is collateral. There's not a whole lot of unsecured lending in this city. In other cities across the country, they're a little bit more willing to extend unsecured credit. Pittsburgh's a pretty conservative banking town, so collateral is important to what we do. Credit. What is the credit history of the business and its owners? You could have a business, fantastic, running well. The business owner has a 560 credit score and filed bankruptcy or has had judgments on their property, and guess what? That could cause you to be declined for a loan. If a business owner cannot control and handle their own personal credit, what are the chances they're going to be able to handle the credit for the business? So that is an indicator that we look at. Capital. Banks like to see owners put money, equity, capital into their own business. We don't like to finance 100% of anything, okay? So make sure that when you're thinking about acquiring a piece of equipment, buying a car, it could be getting an expansion to your building. Most often, banks are going to want you to fund some equity or some cash into that deal. So it's important to have cash on your balance sheet as a business owner. And then we already said this, but what are the overall economic or industry conditions? Those are the 5 C's of credit: cash flow, collateral, credit, capital, and conditions. And then people often talk about character. Character's all part of this as well. Okay, a couple types of loans. Oftentimes people don't use their credit correctly, okay? And I'll show you what I mean. Lines of credit. Everybody's heard of a line of credit, right? Okay. Lines of credit are used for to support the working capital cycle of your business. They're for short-term needs. The way a line of credit is supposed to work is very simple. I have to buy product today. I use my line of credit to buy it. I take the product and I sell it to my customers. When my customers pay me, I take the money that I earned and I use it to pay down my line. And then I have obviously my margin or my profit on it, and I take that out. A line of credit is not intended to be borrowed on and have a balance that runs for 6, 12, 24 months. It's supposed to look like a roller coaster. I borrow on it, I pay it back. I borrow on it, I pay it back. A lot of business owners, they'll go out and they'll buy equipment with their line of credit. And then all of a sudden, they have a cash need and they don't have cash because they use their line of credit to buy equipment. Okay? Lines of credit usually have floating interest rates that are tied to prime. Everybody's heard of prime, right? And LIBOR. Most often in the small business world, you're going to hear prime-based lines of credit. And most lines of credit are payable on demand. What does that mean? Okay? A lot of banks have lines of credit that are payable on demand. What it basically means is I can ask for that money back at any time. If the Steelers lose to the Baltimore Ravens on Monday night and I wake up on Tuesday and I just don't feel that good, we can demand your line of credit. Now, in reality, the banks don't do that, okay? But that's what it means. And interest payments monthly. You don't make principal and interest payments normally on a line, you make interest payments. It's like a credit card. Pretty much like a credit card, only with much lower rates. And no points. Or frequent flyer miles. Term loans. These are used to purchase equipment, make leasehold improvements, fund construction, purchase real estate. These terms range from 5 to 20 years. Do not think you're going to get a business loan for longer than 20 years. Everybody's probably had a 30-year mortgage in their life. You're not getting a 30-year business loan. It's not going to happen. Most business loans, on average, range between 12 and 15. Normally, they have fixed interest rate periods. So again, lines of credit, floating rate, term loans, fixed rate. Principal and interest payments. This is very similar to the way your car or your mortgage is structured. Every time you make a payment, you get principal pay down and interest pay down. Okay, acceptable forms of collateral. I talked about unsecured lending. Everybody asked me, Dave, what's an acceptable form of collateral? Well, I will show you. Okay. We break it into 3 categories. You have real estate, business assets, and then other personal assets. On the real estate side, and this is business lending, you have to separate. Business and personal lending are 2 different things. On the business side, if you have a building that you own, we normally look at 70% loan to value on your property, and maybe 75. So if you have a $100,000 building that you operate out of and it's free and clear, the max loan amount you're probably going to be able to get on that building is $75,000. On residential property, we can go to 80. Now, you're asking me, why would you take personal property as collateral? We can take your personal residence or personal investment property as collateral for your business loan. It doesn't have to be business assets to secure the loan. Oftentimes, we'll take business assets and maybe a second mortgage in your personal residence or in your investment property. That's not unheard of. Raw land, 50%, 30%, somewhere in there. And the reason it is because it doesn't have any value. I mean, the value is limited in raw land. It's not been improved. Now, business assets. This is where it gets interesting. Everybody's heard of accounts receivable, right? Well, we can look at 80% of your accounts receivable, and we can do a loan based on 80% of your accounts receivable, as long as they're being paid on time, as long as they're not 150 or 60 days past due. We can look at inventory at 50%, and we can look at machinery and equipment. Now, why do we look? I had a business owner say to me, Dave, I have almost $500,000 worth of equipment. And it was machinery, there were some tools, and he said, why aren't you going to take this as collateral? Because it doesn't have value to me. It has $500,000 worth of value to him because what he does is he creates a product, he uses it to generate revenue. I don't generate revenue, I'm not in his machinery business. Therefore, if I take it back, I have to look to sell it, and I get paid pennies on the dollar. I'll give you an example. How many people have ever had Cold Stone Creamery? Come on, I know it's early. Let's go. Come on, I have to be up here. Okay. I financed a Cold Stone Creamery. Actually, 2 of them. $125,000 loan. Walk-in freezers. Stainless steel ice cream makers, marble tops. This place, if you've probably been in them, they're legit. So, $125,000, brand new stuff. Company is operating for 18 months, less than 18 months. Cold Stone goes out of business. A lot of the Cold Stones around the country went out of business, by the way. They had a flawed franchise model. But these 2 went out of business. I had to take and sell all of this stuff, all of this kitchen equipment, okay? $125,000 loan. It took me 8 months to sell it. Oh, and by the way, we don't have this fancy thing where we have people sell it for us. No, I put it on Craigslist. I put it on eBay. I hired a guy who would maybe try to broker it for me. I finally sold it after 8 months. All the equipment. Take a guess at how much I sold it for. Yeah, $125,000. Okay, so we have about, what, $10,250. Okay. Anybody else? 50, 30. Come on, this side. $1. This isn't the Wheel of Fortune. Or The Price is Right. All right. 8 months later, I sold it for $2,500. Why? Because everybody knows the bank is selling it. My boss is back there looking at me saying I should never have made the loan. But that's the truth. That's the reality. That's why we discount machinery and equipment the way we do. It has more value to you than it does to the bank. And then other forms, we can take personal stocks and bonds, and we can take cash value of life insurance policies if you have that. So those are acceptable forms of collateral. Banks, we can assist you with structuring your loan, with terms and conditions, with SBA programs. Everybody probably heard about the SBA. No? We're going to talk about that real quickly. A couple things you can do to enhance your approval rate. Obtain a personal credit report before you go to a bank. Make sure that you clear up any past due payments. Make sure you clear up any incorrect balances. You don't want to have any surprises when you go to apply for the bank, with the bank. If you have any unused credit, you can close it. That'll enhance your approval rate. Make sure your taxes are current, please. And verify that there's no legal issues pending against you. Oftentimes we have business owners that come in and apply for a loan, and they say, we're going to pledge this piece of real estate. They don't know that there are prior liens on that property that haven't been paid. And banks are notorious for failing to satisfy their liens. So let's make sure when you get ready to apply, make sure you take a look at some of these things. Have your financial package ready to go. What is your financial package? 3 years of business tax returns, 3 years of personal tax returns, updated personal balance sheet, and a business plan if you're less than 2 years old. Show a willingness to invest in your own company. Research your bank, please. Not all banks are created equal, okay? There are community banks. There are national banks. There are medium-sized banks. Not all banks are the same. Not all banks like to do the same type of lending, okay? For example, in 2008 and 2009, there were a lot of banks that didn't want to do investment real estate. So research your bank and make sure that they're in your line of business, that they lend to your type of business. And choose Dollar Bank. Maybe, hopefully. SBA. Okay, here's another myth. You can't go to the SBA directly and get a loan. A lot of people think as a business owner, I've heard SBA, I'm just going to go to the SBA and get a loan. It's not the way it works, okay? The way it works is the SBA was created to support small businesses through banks. So, we have a business. They applied for a loan. Pretty good, but they lack collateral, or it's just on the fence. And the bank is unwilling to make the loan as it is. We can go to the SBA as a bank and see if they will approve it for a guarantee, a loan guarantee, okay? So there's two types of guarantees. There's a 50% guarantee and a 75% guarantee. And the way it works is the bank, PNC, Dollar, whomever, gives that loan, makes that loan to that business owner. If the business should happen to fold and we need to collect our money, we collect whatever we can through the liquidation of the business. And whatever we have left over, the SBA cuts us a check for 50% of our loss or 75% of our loss, depending on the program. So they are the ones that support the lending process by guaranteeing the loan for the bank, not giving the loan directly to the business owner. Okay? And you pay a one-time insurance premium or a payment or fee for that guarantee. SBA loans range from $10,000 to $5 million, and the guarantees, again, they have 50, 75, and even have an 85% guarantee. SBA loans can be used to expand your business, purchase equipment, fund working capital, and purchase real estate. That is all I have. Do you have any questions? Good. Oh, yeah, you're sure. Yeah, we're back here. I don't know what the booth number is, but if you have any questions, we have some loan officers there, and feel free. We'll be glad to answer anything you may have. Thank you very much.